The rumors began as a murmur, a quiet unease rippling through the financial district. Something was amiss at 888 7th Avenue, a steel and glass monument towering over Manhattan. Archegos Capital Management, a name whispered with a mix of envy and suspicion, occupied the top floors. Bill Hwang, the enigmatic figure at the helm of Archegos, was a man of contradictions. The house of cards that Hwang had so meticulously constructed was beginning to teeter. Wall Street, a place where greed and ambition danced a dangerous tango, had seen its share of spectacular falls from grace. Archegos, shrouded in secrecy, had become a behemoth. Its trades, often hidden within complex financial instruments, went largely unnoticed even by the most seasoned analysts. Within the hallowed halls of Goldman Sachs, Morgan Stanley, and Credit Suisse, alarm bells began to ring. They had become entangled in a web of their own making, tethered to a ticking time bomb. The warning signs were there, hidden in plain sight. The market had begun to turn against Hwang, and the house of cards he had built was on the verge of collapse. News of Archegos' troubles spread like wildfire through the financial world. Banks, fearing catastrophic losses, scrambled to unwind their positions, desperate to escape the impending disaster. On March 26, 2021, Archegos Capital Management imploded. Bill Hwang, the man at the center of the Archegos storm, remained an enigma. Born in South Korea, he emigrated to the United States as a young man, driven by an unwavering ambition. Hwang honed his skills under the tutelage of Julian Robertson, the legendary hedge fund manager, at the prestigious Tiger Management. In 2012, Hwang launched Archegos Capital Management, a family office cloaked in secrecy. But beneath the surface, a dangerous game was afoot, one built on a foundation of borrowed money, a house of cards waiting for the slightest breeze to topple it. Wall Street, ever hungry for profit, flocked to Archegos' door. Goldman Sachs, Morgan Stanley, Credit Suisse, these titans of finance, blinded by greed, readily supplied Hwang with the leverage he craved. Hwang, emboldened by his early success and fueled by Wall Street's insatiable appetite, doubled down on his bets. The seeds of a catastrophic collapse had been sown, the fate of the global financial system hanging precariously in the balance. At the heart of Archegos' dizzying ascent lay a complex web of derivatives, financial instruments that had become both Wall Street's blessing and its curse. One such derivative, the total return swap, became Hwang's weapon of choice. The allure of derivatives was intoxicating. The house of cards was reaching a tipping point, the slightest tremor threatening to bring the entire edifice crashing down. Unbeknownst to the outside world, a storm was brewing within the gilded cage of Archegos Capital Management. Hwang, driven by an almost religious zeal, continued to double down on his bets, his confidence unwavering even as the market showed signs of volatility. He had placed a significant portion of his fund's assets in a handful of Chinese tech companies, convinced that their growth potential was limitless. He failed to see, or perhaps chose to ignore, the storm clouds gathering on the horizon, their shadows creeping ever closer to his house of cards. The first cracks in Archegos' carefully constructed facade appeared in February 2021. ViacomCBS, one of the media companies Hwang had heavily invested in, announced a stock offering, a move that would dilute the value of existing shares. The banks that had so willingly fueled Archegos' rise suddenly found themselves entangled in a web of their own making. Hwang, facing mounting pressure from the banks, desperately sought to maintain his composure. The situation deteriorated rapidly. News of Archegos' troubles spread through the financial ecosystem like wildfire, igniting a chain reaction that would soon engulf the entire system. Banks, desperate to limit their exposure, began selling off their positions in the companies Hwang had bet on, further driving down their prices and exacerbating the downward spiral. By the end of March 2021, the walls had closed in on Bill Hwang and Archegos Capital Management. The date was March 25, 2021. The margin calls had started earlier that day, a trickle at first, then a torrent. Goldman Sachs, Morgan Stanley, Credit Suisse, the titans of finance who had so eagerly fueled Hwang's rise, were now demanding he cover his losses. Billions of dollars were at stake, and the banks, sensing blood in the water, were circling. The margin call heard around the world had been made, and the clock was ticking. As darkness fell over Manhattan, a fire sale of epic proportions erupted on Wall Street. The banks, desperate to unwind their exposure to Archegos, flooded the market with sell orders. Shares in ViacomCBS, Baidu, Tencent Music, and other companies Hwang had bet heavily on went into freefall. The financial system, designed to spread risk, had instead become a conduit for its rapid and uncontrolled transmission. The world watched in stunned silence as the seemingly invincible machinery of global finance ground to a halt, crippled by the collapse of a single obscure family office. By the time the dust settled, Archegos Capital Management had ceased to exist. The family office, once worth an estimated $20 billion, had imploded, its assets vaporized in a matter of days. Bill Hwang, the enigmatic architect of his own demise, had lost his fortune, his reputation, and his legacy. The fallout from the Archegos collapse was swift and brutal. The Archegos collapse exposed the fragility of a system built on debt and interconnectedness, where a single spark could ignite a wildfire that would consume everything in its path. Picking up the pieces. The days following Archegos' implosion were a blur of frantic activity and stunned disbelief. Banks, reeling from billions of dollars in losses, scrambled to assess the damage and contain the fallout. Lawyers worked around the clock, poring over contracts and preparing for a wave of litigation. The financial world, shaken to its core, held its breath, bracing for the aftershocks. Inside the once opulent offices of Archegos Capital Management, the mood was somber. Employees, many of whom had invested their life savings in the fund, found themselves jobless and facing financial ruin. The weight of the collapse, the sheer speed and magnitude of the losses left them reeling, struggling to comprehend the enormity of what had transpired. Bill Hwang, once a figure of envy and admiration, retreated from public view, his reputation in tatters. The devout Christian who had preached humility and gratitude was now facing accusations of recklessness, greed, and hubris. The man who had built an empire on leverage and risk had become a cautionary tale, a symbol of the dangers of unchecked ambition. The financial media, initially caught off guard by the speed of the collapse, went into overdrive. Analysts dissected Archegos' trades, searching for clues to explain the disaster. Journalists chased rumors and whispers, piecing together a narrative of hubris and deceit. The Archegos saga became a morality play, a cautionary tale of the perils of greed and the fragility of the financial system. The collapse of Archegos Capital Management sent shockwaves through the halls of power. Regulators faced a barrage of questions from lawmakers and the public. How could a single family office bring the financial system to its knees? How had such a massive buildup of risk gone undetected? The SEC and the Federal Reserve launched investigations. Congressional hearings summoned CEOs to testify. Banks blamed Archegos for misleading them, while regulators questioned banks' risk management practices. The Archegos saga reignited the debate over financial regulation. Critics argued for stricter oversight of hedge funds and family offices. They called for greater transparency in derivatives markets, and increased capital requirements for banks. The banking industry argued the collapse was an isolated incident, a black swan event that couldn't have been predicted. They lobbied against sweeping reforms, fearing it would stifle innovation. As investigations progressed, the blame game intensified. The Archegos saga became a political football, with both sides using it to advance their agendas. The public watched with anger and bewilderment, wondering if anything would change, if lessons would be learned from this latest financial debacle. Years after the collapse of Archegos Capital Management, the ghost of the firm continues to haunt Wall Street. The name Archegos has become synonymous with excessive risk and regulatory failure. The collapse forced regulators to confront the risks posed by family offices. New rules were implemented, but questions remained about their effectiveness. The Archegos saga also served as a stark reminder of the dangers of leverage, the double-edged sword that can amplify gains but also magnify losses. The ghost of Archegos serves as a constant reminder of the fragility of the financial system. It is a story that continues to resonate today, urging us to question the systems we have built. For in the world of high finance, the line between boom and bust can be razor thin. The collapse of Archegos Capital Management sent shockwaves throughout the financial world, exposing the hidden vulnerabilities of a system built on interconnectedness and leverage. While the initial tremors have subsided, the echoes of the disaster still reverberate through the canyons of Wall Street and beyond. The sheer speed and magnitude of Archegos' downfall served as a stark reminder that even in the digital age, where information flows at lightning speed, opacity and unchecked risk-taking can thrive in the shadows. The traditional safeguards designed to prevent such catastrophic failures proved woefully inadequate, leaving regulators scrambling to catch up and restore confidence in a system many believe is rigged against them. In the aftermath of the collapse, calls for greater transparency, stricter regulation and increased accountability echoed from the halls of Congress to the trading floors of Wall Street. Yet, as the initial shock subsided, the sense of urgency seemed to fade, replaced by the familiar rhythm of business as usual. The cycle of boom and bust, it seemed, was destined to repeat itself. The question remains, has anything truly changed? Or will the lessons of Archegos fade into the annals of financial history, a cautionary tale whispered among traders but ultimately forgotten in the relentless pursuit of profit? Only time will tell if the ghosts of Archegos will be enough to exorcise the demons of unchecked greed and systemic risk that continue to lurk within the global financial system. The downfall of Archegos is just one example of the complex and often hidden forces that shape our world. At Oblivion Unlocked, we're dedicated to shedding light on these stories, to unraveling the mysteries and exposing the truths that often lie buried beneath layers of obfuscation and deceit. If you found this story insightful and engaging, we encourage you to like this video and subscribe to our channel for more deep dives into the world of finance, power, and the human condition. Our team of researchers, journalists, and storytellers are committed to bringing you meticulously researched and compellingly told narratives that will make you question everything you thought you knew. At Oblivion Unlocked, we believe that knowledge is power, and that by understanding the forces that shape our world, we can become more informed, engaged, and empowered citizens. Join us as we journey into the heart of the unknown, uncovering the hidden truths, and unraveling the mysteries that surround us. Don't forget to hit that notification bell to stay updated on our latest releases. Together, let's unlock the secrets hidden in Oblivion.